And that was just enough to give us a nice jump in Euro, Sterling, Canada, Aussie.
Some pretty big moves here.
Yes.
Yeah, the commodity
currencies. When was the last time we had 70 pips up in Aussie and Kiwi up 60? You know what? It's funny, and this speaks to that looks like such a big move. It's 40 pips.
Yeah, it's not enough to get us back to 63 cents.
No, but we talk about from tape action a little bit. What we need to do is have a move like this off the lows. Then we need to see some consolidation, and then we need to see another leg get put into it, and we need to hold on to a higher level. I don't care if it's from 62 cents or 65 cents. We need to hold on to a higher level for 24 to 48 hours. Now, where do I get all these? This is just kind of ballparks of if there's a change in risk tone, and this is just not another 50-point rally you can lay into and sell, which has been the thing to do up till now. If there's a little bit of sea change here, and what makes the change? This does. The fact that we're...
it's the biggest rally we've seen at least in the last month, maybe 2 or 3 months going back to this whipsaw here.
Right. And we're 700 points off the highs back in October.
Yeah.
That's 3 months away. So we need to build on that a little bit. If we do, then it gets, we talk a lot about, for me, it's hard, and I've learned that if the only story you can wrap up being long is they're cheap, that's a story where if you're going to do it and be the true contrarian, you got to do it small because chances are you're not pinning the low. Because along this ride, we would have called 64 the low and 63 the low right before we traded below 62 cents.
You have to be saying to yourself, this thing is cheap and I see value.
Right.
And over the course of this stretch, the last 3 months of 2024, you see very few rallies. And to Pete's point, you see very few rallies that landed this market higher for more than 2 or 3 days. And so I agree with you. If you've been looking at these currencies, especially the commodity currencies, we'll get to the euro in a second, and pound up over 100 pips today. If you've been looking at these currencies and saying, I'm going to go contrarian on this. I'm going to buy some of the 64s or 63s and even 62s, which you got all you want last week.
Right.
And I see this as a contrarian play or a value play or whatever. And you've seen just these small rallies in here, this junk of, 20 pips higher, 30 pips higher, and the market ending up lower on the week.
Right.
You're not getting any confidence, and the market hasn't reversed. I mean, there's been go back to November. Look at these rallies where you get 30 pips, 40 pips, whatever it is, and then they sell into it immediately, and then the market fell another 200 or 300 pips. What Pete is saying that this is the biggest rally that we've gotten in these markets against the biggest sell-off in the U.S. dollar, if you've been short USD, that we've gotten in the last couple of weeks, maybe couple of months, depending on what market you're looking at. But 2, to feel confident that this market might be actually finally reverting in the other direction. We talk about mean reversion in currency markets so much because, take a look at the long-term chart and tell me that this thing isn't a mean reverting market that doesn't just trend in one direction. If it was like equities or like some different markets that tend to trend in one direction or the other, then you would have seen, 80 cents, 90 cents, a buck, 110, 120, 130. We'd be trading, in some crazy extreme
drift. Right.
But to your point, Pete, I couldn't agree with you more. To feel confident that these markets are maybe on the precipice of a little bit of mean reversion, of a little bit of reversal, whatever you want to call it, this market has to land at least higher than 63 at the end of this week.
Yeah, absolutely. And, trying to pin those last few pips at the bottom is, after 42 years doing it, is an expensive exercise.
Yeah.
You have to be very disciplined about it, and you have to do it in small incremental ways. You're going to find that, yes, you are not going to get the 62 cents long Aussie here. But what you will do is possibly get a trade that has some elasticity now, where you can trade it up to 65 or And it's not going to go straight back to the middle of the range in 1 or 2, 3 days, but it's going to give you a little bit of back and forth. So don't always feel that unless I get them at the rock bottom low, I can't buy. I didn't buy the 62s. I can't buy the 63s. You absolutely can, given structure.
Well, look at, just as an example, and we have no ties to cryptocurrency. tastyfx doesn't offer it. But look at Bitcoin the last 2 or 3 years. Okay, that market sunk down to the 15 to 25K range, and it traded there. You could have gotten all you wanted for months and months and months. And if you were dead set on, I've got to get the lowest prices, I've got to buy the 15s and the 16s, and that's all I'm going to buy, or I'm going to buy the 15s and I'm going to hold for 12s or 10s, or I'm going to hold. I remember people being like, my bid's below 10K. And it's like, okay, great. You kind of made that price up. That's fine. But now you've got a market that has, dramatically bounced back. And I have no clue where the hell Bitcoin's going. But just as an example of how price action tends to work in volatile markets, like commodity currencies can be quite volatile, I couldn't agree with you more that if this market is bouncing back here, and maybe we do get some legs to above 63 for this week, and it gets back to the middle of the range, maybe some point in January, February, I have no clue what's going to happen. But if that is what we're on the precipice of, trying to trade around this junk, or saying like, oh, I'm going to get the 61s or below 60, that becomes a fool's errand. And it does become kind of a costly one at that you're trying to be like, oh, I'm going to go full boat at 61.5, with Bitcoin being a good example of oh, I'm going to go full boat at 20, and then you get tapped at 15, and then this market has this unprecedented run back to 50, back to 60, and now obviously on to 100. This is the way that price action tends to work in here. They beat these markets up. It feels like it's never coming back, but when it does see some mean reversion here, I couldn't agree with you more that if you liked this market at 62, 62.5, and now it's bouncing back and we get some confidence this week, you can't look at the 63s or 63.5s and be like, oh, well, that's crazy. I couldn't possibly lift an offer at 63.5.
Right, because they were down. I could have bought something sub 62. Don't get caught in that mindset. Let's run through Euro.
Sure. Because, I got a couple notifications on this Euro. Although Aussie is actually, let me just go back just to pull up the 15-minute chart, and then we'll rotate through them.
Go to the Kiwi, too.
Aussie and Kiwi here are seeing some strength going into the U.S. Open, whereas
now, again,
this Euro is giving back a little bit of ground.
Go back to the Kiwi really quickly. If we go out to the daily there, we would have looked at 57-cent Kiwi as being incredibly cheap.
Unbelievable. A month ago.
Yes, that is really cheap. Now we're not even, we're 30 pips away from straddling that. So that's where, don't get caught in, I missed the bounce. You didn't miss anything. What you want to do is see, and January is classic for FX. I'm not saying that the dollar's topped out now. Currencies are bottom out.
One day.
But what we will see is, traditionally in January, we see some good fits and starts. We'll see a couple of days of good run. Then it fades back. Then a couple of days of good runs in the other direction. It's oftentimes a two-sided trade. It usually doesn't rip one way right out of the box. I count Thursday and Friday as kind of not, sure, we were open, they were trading, but there weren't really full days. Today is really the full day of January, and we've got, a new president being inaugurated. Thursday's kind of a funny day because it's a holiday for President Carter.
FX
doesn't affect FX markets. We're open 24/5. So
and then non-farm on Friday.
Non-farm on Friday, right?
Yeah. So this is quickly becoming here. They're dumping a lot of data in this week because we didn't have a lot last week, and that's global data. There'll be a ton of stuff. But yeah, it'll be really interesting to see this Euro piece trying to bounce back, and actually as recently as an hour ago was up 100 points here to start the week. It's given back some ground. So continue to not only watch the U.S. dollar story, Pete, but how the different sectors of FX are moving, because you're already seeing this yen obviously wasn't a big part of the tariff story. The dollar yen story is very interest rate focused. Same with the Swiss franc. And so that's why you're seeing only, you know,
Yen didn't move. When everything else moved last night, dollar yen was higher.
yeah, wow. Let me take a look at the 15-minute chart. But
Yeah.
but either way,
Look at that. This was
wow.
just recently. Yeah, dollar yen got up. We almost plumbed 158. This is right at bedtime for me. So no, it's actually a little early for bedtime, but.
Wow, that's pretty crazy. But either way, you're seeing distinct. And so if you're into non-dollar crosses, there's some interesting stuff because the commodity currencies really outperforming to start this week. That euro sterling looks like it's given back some ground right now. And then you look at the yen and the Swiss franc, and they're not super correlated to the news that's pushing everything else.
Absolutely. And this is where, the ability to trade non-dollar pairs isn't just, hey, here's something more complicated. It's not. It's just another expression of when the dollar story becomes not just a dollar story, but more of a currency story.
Yeah, look at this move in euro yen.
Yeah.
A nice big rally. And now with the yen strength and the euro weakness we're seeing this morning, big reversal.
And that was the biggest, from what we got last week, that was by far the most outstretched extreme.
Yeah.
So you're not going to a more complex space. This is one of the great things with Spot FX. You can choose this. You don't have to rebuild something. It's right there. It's a tradable pair for you. Very difficult to replicate in the world of futures, impossible to replicate really in the world of ETFs. So that kind of exposure is really straightforward to have. This will be an interesting one. Euro sterling, even sterling yen, which is less traded, but can still be an interesting one to play through a little bit.
I just love the idea of already this morning, the U.S. session hasn't even kicked in, and this euro yen piece has seen
100 pips.
100 pip move back and forth, not in one direction. This was trading 164 an hour ago, and it's 163 now. Crazy.
So we're getting what we want, which is two-sided tape action. All right, this is going to be an interesting week, guys. Stick with us. We'll be back with you tomorrow at 6:30. Have a great day. We'll see you soon.